If you're thinking about buying an investment property, this is a must-watch video. Now, a lot of you might be thinking about buying a home or buying a unit or trying to compare logically and statistically one versus the other. So if that's you, this is absolutely the video, because I'm going to talk about what the research says about whether it's better to buy a house or it's better to buy a unit. G'day there, my name's Ben Everingham. Now, if you haven't already done so, please give us a thumbs up or subscribe to our YouTube channel, where we produce 3 to 5 of these types of videos every week, helping you become a better investor. Now, I was recently, or not recently, but in the last couple of years, really doing some analysis and trying to understand the Australian property market so that I could make much better decisions as an investor. And one of the crazy pieces of information I came across was by a company called CoreLogic. Now, they looked at the entire Australian market, all of the regional areas, all of the metro areas, all of the suburbs in Australia against each other, and what they found almost knocked me completely off my seat. Now, what they found is that houses have performed over the last 25 years in Australia 86% better than units. Now, that is a piece of information that as an investor I can use to my advantage, because so many people go out there and buy units, and that's completely okay. I suppose owning a property over the next 30 years is better than not owning one, but I just don't want to lose money on my investment, or I want to make the best possible decision. Because another key piece of information that I've recently became aware of is that only 7.9% of Australians actually own an investment property. Less than 1.4% of Australians own 2 investment properties. Now, that just again almost knocked me off my seat, because the reason this is such important information is that it might be nice, to think about owning lots of properties. Maybe you're the person that beats the house, maybe you're the person that invests in a lot of properties over the course of your lifetime and does significantly more than the average person. But if you're just the average person like me, that has a limited amount of money, that has a family that I care about, that has a low risk profile, and that wants to make the best decision I can with each dollar that I have to invest, then buying houses makes so much more sense. Now, obviously there's markets where I'm sure units have done better than houses in regional areas. I'm sure there's always like the unicorn or somebody beating the house on this amazing unit, or this capital city where units have just gone crazy. But what we're talking about is every suburb, every market in Australia over 25 years, and an 86% difference in houses. So today I really wanted to talk about some of the benefits associated with houses, as well as some of the pros and cons associated with units. Now, one of the things that I love with houses and large pieces of land is the fact that you get land that is freehold, that you own, and that is your patch. Now, if you look at the values of properties over time, effectively, the higher the quality property, the larger the piece of land, the more future potential for the value of that land to increase in value. So I love that houses have a larger land component. I also love that you are in control of that land component. Now, what I mean by that is when you own one home with one piece of land, or a piece of land with a couple of homes on it, or a piece of land that you can put lots of stuff on it, you control the asset, not somebody else. And why this is so important, and one of the major negatives associated with a unit, is the fact that you don't control the valuations on your unit. Because from my own experiences, I bought a unit in Miranda in the Sutherland Shire of Sydney. It was a unit in a complex of about 100 other units. My valuation was always directly related to either the cheapest unit sale in the suburb or the cheapest unit sale in my block. And let me tell you, when you're surrounded by 100 other people, generally one of those people is coming into financial hardship and always looking to sell for a price below market value. So I don't like the fact that I can't control units, which takes me to another negative associated with units, and that is the fact that there's additional costs like strata as well as body corporate. Now, again, with my own experience with a unit, I bought this unit in Sydney in 2011. When I bought the unit, my strata costs and my body corporate costs were about $2,000 per year. And then all of a sudden, I didn't read the fine print on the body corporate statement enough. They were planning on some major works, and all of a sudden, I went from paying $500 a quarter to $3,000 a quarter while they raised that money to redo the pool, to redo the lift, and that wasn't even a serviced unit complex. So a negative associated with that is you are not in control of the costs associated with the management of the building. You know, maybe someone in the building is influential. They want to replace, you know, the glass on their balcony, which means everybody else in the building has to replace their glass on their balcony at the same time. Or maybe it's just an expensive complex with pools, spas, saunas, lifts, and all of those things require gardens, gyms, a lot of long-term maintenance. So another positive associated with land is that you can actually add value to land. Now, because you're in control of the land, you might be in an area where you can either renovate the home, you can knock down and rebuild the home. Maybe if you've bought the right piece of land, you could add a granny flat to it, or you could subdivide it, or you could put a duplex on it, or you could build townhouses. There's just unlimited options. Maybe you could convert a 3-bedroom home into a 4-bedroom home, an ugly duckling into a renovated property. There's just so many options there to add value to the property, where I've found with a unit, effectively once you've actually renovated the inside of the unit or slightly changed the floor plan, you're stuck, and now you're 100% dependent on the market increasing in value for any future gains, or getting everybody else on board in the unit complex and actually cleaning up the building so that you can create value. So that's another huge thing outside of obviously the physical size of the land, the fact that you can control it, and then the fact that you can add value to it. Another thing that I really dislike with units is the fact that you've got a smaller piece of land. Now, what I mean by that is, let's say that you've got 100 units sitting on top of a 3,000 square meter piece of land. So you've got a big unit complex sitting on a nice big patch of land. Effectively, to find out what your land component is you have to go 3,000 square meters divided by the 100 units on top of it, giving your land component. Where when you're looking at a home with a larger piece of land on it, you've effectively got a much larger land component, which longer term results in stronger gains on the property that you buy. As an investor, I just believe it's super important to get educated before you go out there and make decisions that could cost you a lot of money in the future. Because I remember when I was personally getting started, it was all about buying the cheapest possible property that I could afford, in a suburb that I could afford, in a street that I could afford, and I thought buying below the median value of the suburb was me like crushing it. If I could make $20 or $30 or $50,000 on the way in, I was absolutely loving it. But now I know what I know. I've learned that higher quality, larger pieces of land in capital cities, close to the city or close to the beach, performs so much better over the long term, it's not even funny. Now, here's an example. Let's say that you were to buy a piece of land with a house on it in Melbourne, or a piece of land with a unit on it in Melbourne. Now, it might not seem like a huge decision today, but if we look at 86% divided out by the last 25 years, we're talking about almost a 3% difference per annum. We're talking about a 3% higher return per annum when you look at the house in the average Australian suburb versus a unit. Now, 3% might not sound like a lot to you. Let's even be more conservative. Let's say that because houses and units are expensive now, that the gap over the next 25 years is only going to be a 2% difference per annum on buying a house with a larger land component versus a unit. Now, let's say you go out there today and you buy a $400,000 house or a $400,000 unit in Melbourne. Now, one of them grows by 4% per annum, which is the unit, versus the house that grows by 6% per annum for the next 15 years. That 2% difference per year, compounded over the next 15 years, is a difference of over $235,000 better off you'll be just with a house with that extra 2% per annum. But what if you owned a couple of properties, or what if you owned one really nice property, you know? What if you went to Sydney and you bought $1 million house with a piece of land, or $1 million unit? And let's say again, the house performs 2% better than the unit over the next 15 years. Now that 2% difference, which again just doesn't seem like a lot, and so many first time, second time, third time investors are so caught up trying to save a little bit of money on the way in that they forget about what buying the wrong product is doing to their long-term wealth position. That 2% on $1 million, which is the difference between the houses and units, is going to make or lose that person over $550,000 just on $1 million. You know, what if you own $2 million worth of property? Are you prepared to lose over $1 million in gains over the next 15 years just from not taking this information on board? So the first thing that I did when I found out about this was reviewed my existing portfolio, and also made a commitment that moving forward I'd only do things that were data backed, which means for me investing in high quality pieces of land in good markets at the right time for the right price. Now, if you're interested in talking more about this stuff, please jump over to www.pumpedonproperty.com, where you and I can sit down for a one-on-one strategy session and we can review where you are right now, where you would like to be in the future. We can talk about your existing portfolio, we can talk about your property plan for your future, and we can sort of get some different ideas like this. Now, this is just one idea. There's so many different things we've talked about, which is why you should definitely subscribe to this YouTube channel and check out some of the videos we put out each week, as well as some of the videos we've done in the past. So I wish you all the best. Happy investing. Remember that you can learn from the past. You don't have to beat the house to become a successful, wealthy investor that creates financial freedom for yourself or your family. You can just learn from these little tips and tricks to make way, way better decisions. Good luck.